Welcome, everyone, to Clearing the View, an investor series from AtlasClear Holdings, trading on the New York Stock Exchange American under the ticker ATCH. Today, I'm joined by Executive Chairman John Schaible and President Craig Ridenhour. Lots to discuss, gentlemen, so let's jump right in with the Dawson James and Commercial Bancorp deals announced. How much new stock could be issued, and what does the pro forma share count look like once both close?
That's an understandable question, right? We want to know what the dilution is going to be. With respect to the Commercial Bancorp agreement, which is to definitive docs, that also has a range to it based on certain elections and book value. As we stand today with the elections the shareholders have made and the current book value, we could see dilution of approximately 38.8 million shares. With respect to Dawson James, once we're down to final definitive documents, we'll be able to share what the upper side could be as well.
Great. And so where do the Commercial Bancorp regulatory applications stand currently? And is there anything you can share on the expected path to closing?
I'll go ahead and take that, Anna. We get this a lot. It's a very important part of what we're doing right now. Um, we can't speak with specificity, and we certainly can't elaborate or speculate on how long this could take because we never want to do that. We don't want to step into the regulatory shoes. What we can say is that the initial interactions have been going very well with the Federal Reserve. They're getting to know us. They're getting to know our management. They're getting to look at the plans, what we have longer term for Commercial Bancorp. So the initial cadence and what we're doing with them, we've been very positive, and we think it's moving along well. We can't project what that timeline looks like, but early indications are, at least from our side, we believe we're in a good place and moving well.
Good to hear. So the proxy proposes increasing the share reserve by roughly 15 million shares. John, that's a big number relative to the current share count. So how did the board land on that?
Yeah, relative to the current share count, it's about 10%, and that is a big number. There's a couple of thoughts that went into the board's deliberation to try to strike the best balance possible for us to attract and retain the right talent, which we've been announcing how we've been growing and the hires we've made. The previous employee stock option plan was completely decimated with the 60-to-1 reverse split. And so we needed to find a number that allowed the management team to go out, attract the right talent, retain the right talent, and aligning the employees with the operations and performance of the company, we really firmly believe is the best way to make sure the company succeeds. So board put a lot of work into finding the right number, and we've put it in front of the shareholders, and we're very optimistic the shareholders will vote for it because it's the right thing for the company.
And can you clarify, are the grants under this plan going to be tied to performance? Is it share price, operating milestones, or are they time-based?
Sure, I'll take that. I think most of the shareholders or investor base probably are in companies and they understand that a lot of grants have different attachments to it. So the answer is any and all above, depending on the person, depending on the contract, depending on what it's being used for. Some are time-based, certainly some are milestone-based, and certainly performance-based. Not only for our current employees, but eventually additional employees that we bring on board. We're going to tie them to metrics so that they're not just going to be free handouts. At the same time, this will afford us the ability for our employees that are currently here to put a plan in place so that they can participate and buy equity in the company as well. And grow with the company and have we're all rowing this boat the same way. So we're excited about the opportunity. We think it's the right balance, as John mentioned, and certainly we're gonna have ties to each of those grants.
Great, thanks for clarifying. So Q3 looks strong, revenue up 65%, the de-SPAC liability is mostly gone, equity back in positive territory, but the stock didn't move. So what's your read on the disconnect, and what do you say to shareholders?
I will take that one. It's a disconnect for me too. It's a head scratcher for me. We've laid out a plan. We continue to execute on it. It is a complex plan. Bringing a bank together with a corresponding clearing firm and tying the technology together is a challenge, but we've been executing on it. We've been adding the customers.
And with that said, are you planning to provide formal guidance at some point? And if not, what numbers should we be tracking to know whether the business is on the right path?
Sure, I'll take that one, Anna. Yes, our intention is to eventually provide formal guidance. But that's after we've accumulated more data points. We've been obviously public for a little over 2 years. But the first year and a half, we've been very public about it. We had to clean up the balance sheet. We had to make a number of changes, and we've done that. So once we get enough data that we're consistent with, including the onboarding of correspondent clients, right, so that people can actually see it and feel it, and we can actually put a number to that. Our intention is to provide formal guidance. What the street should be looking for right now, investors should be looking at, obviously we're adding correspondent clearing clients. That's hard for us to articulate what that means at this moment. They'll just have to see it in the numbers, but it is a volume-based number that begins to grow for us. We've been growing stock loan. We've been growing. We really have grown Wilson Davis's platform significantly. When we acquired them, I think that they had done about 9.5 million, maybe around there in revenue. I mean, we're at a run rate right now of 17, 18. We've about doubled it at this point. And now we're adding capital into the engine. So there'll be a number of metrics they'll be able to measure and see the growth. And then also there'll be the additional growth of the acquisitions that are proposed, provided we receive approval on both of those. Our numbers just on the trailing 12 would be 45 million, dropping about 5 to 6 million in net income. That'll be measurable. That's significant. Now we have to get through the regulatory processes on those, but I think there'll be things that the street will be able to key on and say, well, they really are, as John said, we are executing now, but they'll really be identify it and hopefully participate with us.
Well, talk a little more about that. Wilson Davis net capital, it's up about 50% from when you acquired it. So what does that let you do operationally now that you couldn't do before?
And operationally, it allows us to move forward with an application with the OCC to become a member of the OCC and participate more broadly in stock loan, which will help us drive revenue. It also allows us to onboard more correspondent clearing firms. And that's why we've gone up to 5 so far. We have more in the hopper. It's really improved our position. It's improved the perception of our company to our potential customers. And so operationally, it's been a boon for us.
Great. Well, let's talk a little more about into the future, looking out 12 to 24 months. What milestones do you want shareholders that are watching right now to be measuring you against?
Well, I'm gonna sound like a broken record. I think we would certainly encourage you to look at the correspondent clearing clients that come on board. We do have a fixed structure underneath. Now, we acknowledged in the actual earnings report that we've added some additional staff. We've had to do that selectively because our pipeline is bursting. What we want to do is we want to selectively add the right staff. Like, for instance, we brought in an executive from Robinhood. We brought in some others from different places. And it brings new blood into the system, but also expands our ability to add clearing clients. So that's one of the measures. I would also take a look at and encourage people to look at the underlying within Wilson Davis, stock loan, investment banking, the things that are going to grow. And then you couple that in, if provided we receive approval on Commercial Bancorp and Dawson James, there's going to be measurable numbers that you'll really be able to gauge and say, wow, they're executing. And that's over the next 12 to 24 months. And we're not done with these two acquisitions we've announced. We're in constant discussions about additional potential acquisitions that add scale, positive revenues, technology. That again, we've been very verbal about this, that we don't make acquisitions just to make acquisitions. We make acquisitions to take us where we need to be over the next 5, 10 years with risk management and regulatory compliance and in this ever-changing market of financial services. So the next 12, 20, 24 months, there's going to be a lot of moving parts, but we're very excited about it. We think that the street will react well to it eventually, and we encourage people to partner with us and enjoy the ride because we think it's going to be a positive one.
Can I add just a little bit of something, Craig? You touched on it, but it's one of my favorite words, accretive. They're accretive acquisitions. So
Yep.
that's our primary focus when we look at the opportunities that are in front of us.
Perfect. Well, thank you, John, and thank you, Craig, for
Thank you,
addressing
Anna.
these questions and giving us all these updates on AtlasClear. We certainly look forward to following along with the company's continued progress. So thank you for your time today.
Thank you.
All right. Thank you all for
Thank you.
watching.